We okay to kick off, Tracy? Yes. Good evening and a warm welcome to the Rushcliffe Borough Council's Governance Scrutiny Group meeting. Welcome to our members, welcome to our officers and those that are watching the live stream on YouTube. I would like to remind everybody that the meeting is being live streamed on YouTube. A recording of the meeting will be available afterwards on the Council's YouTube channel. In addition, under the Executive Meetings and Access to Information, England Regulations 2012, other people may film, record, tweet or blog from this meeting. The use of any such images or sound recordings is not under the Council's control. So a very warm welcome to all. I would like to introduce our members who are with us this evening. We have to my left the Vice Chair of the Scrutiny Governance Scrutiny Group, Councillor Gray. We have Councillor Stockwood with us, Councillor Shaw, Councillor Howitt, Councillor Adair, Councillor Sims, Councillor Beardsall and Councillor Healy. We also have in attendance our officers. We have Charlotte Kevenatack, who's the Service Manager for Finance. To my right, Sarah Whitaker, who's the Finance Manager. Marie Herold, who is a Finance Officer, and Tracy from Democratic Services. So welcome to everybody. I would like to move on to the first item on the agenda, and can we have apologies for absence, please?
Thank you, Chairman. There are no apologies this evening. Thank you. Thank you,
Tracy. In which case, can I ask our members and those in attendance to declare any conflicts of interest, if there are any? No hands showing, so I'll take that as no declarations of interest to declare. In which case, item number 3, minutes of the meeting of our Governance Scrutiny Group held on the 24th of June, which are on pages 1 to 8 of our pack. Do we have any amendments or observations or corrections on the minutes of that meeting? No amendments. So Tracy, if we can record that as having been noted, and I will sign the minutes at the end of this meeting. Thank you. Moving on to the substantive items in our agenda this evening, we have the risk management report from the report of the Director of Finance and Corporate Services, which I believe, Sarah, you will be presenting to us.
The risk management report.
Oh, it's Charlotte. My apologies, Charlotte. Charlotte will be taking us through. So, Charlotte, can I hand over to you just to take us through the report and highlight any particular issues that may require our attention? Thank you.
Thank you, Chairman, and good evening, everybody. So the last risk management update you had was back in February. This is our 6-monthly update, and you'll find the report starts on page 9 of your agenda pack. The report itself brings to the group's attention changes that were made, first of all, to the coding of risks in terms of the Council's internal restructure that happened in May this year. So if you're trying to follow through from the report that you had in February, don't get confused. All of the changes are outlined in paragraph 4.2 of the report. So there are currently 45 corporate risks and 32 operational risks. And the number of risks within the register fluctuates through year as a result of active risk management. Appendix A presents the Council's risk register containing the corporate, operational and COVID-19 related risks. This report sees a larger than normal number of changes, which reflects the end of the COVID-19 restrictions and 3 months of recovery, allowing the organisation to demonstrate stability and the ability to respond to issues as they occur. There are 6 new risks and 5 risks have been removed as a result of recent reviews. Additionally, there are 5 increases and 10 reductions to risk ratings. And these are all detailed at paragraph 4.4 on pages 10 to 12. I would also like to bring your attention to Appendix B, Appendix A, which contains the risk register, but especially Appendix B. I'm obviously excited about that one. It's the first time that we've been able to put an opportunity risk before the committee. So we always try and balance risks and opportunities. And this is an opportunity where we say, do you know what? There are actually risks contained with not doing something. And those of you who have been on the governance group for a while will remember this was one of the recommendations from the Zurich health check, which I believe you looked at last November. As always, I'm happy to answer any questions that you might have about specifics contained in the report.
Thank you very much, Charlotte, for the overview. And clearly, as you've stated, there's been a number of changes, some increases, some risks removed, and the addition of the opportunity risks as well. So quite a comprehensive report. I would like to, I'll open up the floor to members in a moment in terms of any comments, observations or clarifications on the report, but perhaps during this particular item, and just going back to the recommendations in the report, members are asked to comment and make recommendations, particularly on the red risks, red alert risks, which are contained within the report. So I hope to focus in on that a little bit during this discussion. So can I open the floor to our members for any questions or clarifications or observations? Councillor Adair.
Can you put your microphone on? Sorry.
Sorry. Not whistling. Not whistling. No. 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 I was just looking at that one, and just that's a new development, and obviously you've done a lot of costings on it.
Sorry, can you be specific about which one? Because we didn't hear the first bit of the question.
Appendix B, 4.7, Appendix B, Stragglethorpe, the development of the crematorium. And it's just that whole project. But in the current climate, there could be a major financial risk on that. And that's what I'm really getting to, because it's a new development. We know what's happening in the development world, the building world, and everything else, the supply chain world. Prices are increasing. Could this project run well over cost currently, or is it being recosted to mitigate what might happen?
Appendix B, Councillor Adair, is the opportunity risk.
Yeah.
The financial risk of being involved in the project is covered in the main risk register, and it's kept under constant review. So I think that we're taking care of that one and making sure that we're not at any danger for the council.
But there's no risk.
There's always a risk. That's why we have a risk register. The risks are currently mitigated.
Yeah. Okay. Thank you.
Does that clarify, Councillor Adair, the concern which you have?
My concern is that like all developments at the moment within the supply chain, where you're doing development building and costings, if we costed it a year ago, those costings will not live up to expectation today, because it's the supply chain and the costs that are increasing in developments right across. One, getting the supplies, and two, them getting them at the price you originally costed at. So that's what I see that as a major risk. And this project here, I see that as a major risk in it. And of course, there is the other one at Bingham as well, which could fall into the same category.
Yes, then Councillor Healy, I think, wants to come in as well.
Okay.
Do you want to respond to
Yeah, just to reiterate the point that Charlotte made about us continually monitoring with the developers and within the project groups, the movement on the prices is a key item, but also within the project costings, there is an element of contingency in there for the expectation that things may change along the way. So those things are kept under control and monitored regularly, and this will be fed back to the regular groups.
Thank you, Sarah, for clarification there. Councillor Healy, you wanted to come in.
Thank you, Chair. Just on the list of risk increased, there are two really based around planning and developments and application fees, both of which I notice are the level has increased from 1 to 3 in the first instance, from 2 to 3 in the second. But I understand that they probably were generated as a result of staffing shortage or vacant posts, which, as I understand it, are now filled. And I'm making an assumption on the basis of that, that risk perhaps isn't as likely as it may initially appear. Thank you, Chair.
I have a feeling that you may find that one goes back down again, although there is still an awful lot of planning work, and staff will obviously take time to settle into their new roles. We have recruited to a number of those roles that were vacant. Bear in mind, please, that this is the result of work that was undertaken at the end of August. So it takes a while to filter through to you.
Thank you, Charlotte. Councillor Stockwood.
Thank you very much, Mr. Chair. Continuing the theme of the planning risk identified, on page 7, it's OR-DEG07, failure to determine major planning applications within 13 weeks or agreed period. So there is an explanation within the text on page, within the text of the report, that this is an increasing risk. But within the report, I feel that a risk that is moving from 3 to 9 would be a red risk, and that that risk should be correctly identified as a red risk. And that brings me to page 4 in the numbering of the report with regards to the new risk, CRR-DEG06, which is very much near the top of the page. It's numbered page 4. I think it might be actually page 20 in the pack. Again, a current rating of 9 is in all of the risks a red risk, but on the county deals, it's a yellow risk. As a new risk that's been identified with an immediate rating of 9, I would like to hear more information about what the internal controls and mitigation we're taking with regards to county deals, and perhaps I would appreciate perhaps this new concept of opportunity risk could be discussed within this point, because I think that a red rating of 9 suggests that there's potential negative impact of a county deal, whereas perhaps a county deal could be perceived as an opportunity risk in the sense that it's going to bring in financial benefits to the council and have a positive impact. So this new risk, county deals, I think it would be helpful. I think it should have been identified as a red risk, and I don't think it was pulled out in the focus on risks at alert level red status later on in the report. And so I'd like to ask to hear perhaps a little bit more detail about the internal controls mitigation, the financial impacts, and whether or not we could actually perceive a county deal as a positive thing moving forward. Thank you.
So Charlotte, would you like to respond to that? So we've got ORDEG07, which I think is showing as a green when it's a 9, so that should be a red, and the county one which Councillor Stockwood has raised in terms of mitigation actions, and perhaps it should be an opportunity risk.
I'd like to thank Councillor Stockwood for pointing both of those out, which have failed our internal controls. They should both be red. We'll make sure that that's changed moving forward. With regard to the county deals risk and the request to understand what the mitigations and controls are, I don't have that information to hand at the moment, but I will make sure it gets circulated to the group after the meeting. And I will also raise with the internal risk management group the fact that ought to be an opportunity risk should be considered.
Thank you, Charlotte. Councillor Stockwood, hopefully that covers your points. Councillor Sims.
Yeah, is this the full RBC's risks? This is the full risk register, is it? This is all the identified risks.
This is what we monitor at this group, which are our corporate and operational risks.
Right, okay, so there's operational risks in here as well, is there?
There are, yes.
Right, okay. Because I'm surprised I'm not seeing things like business continuity, loss of the arena. I'm surprised I'm not seeing staff retention, lorry drive, you know, if we're losing wagon drivers there. There's lots of risks that I'm surprised I'm not seeing in this. Maybe I've missed something, but I you know, just on a glance at it, I would think it would be more comprehensive. There'd be more corporate and operational risks that RBC have that are not on this. So that's just an observation. And that's what we're here to do, to scrutinise. So how long has it been since your risk management process has been reviewed on your policy, what you're trying to achieve by it?
No, I was just going to ask you to turn your mic on, Charlotte. That's fine.
The risk management strategy was reviewed last year, and Zurich independently did a risk management health check, which was reported back to this group last year as well.
Right, okay. Thank you.
Charlotte, on the point of the fullness of the register, so clearly Councillor Sims has raised certain risks which don't appear at the moment here, but is there therefore a more comprehensive register, and are these selected one, either their red status, or, you know, in terms of this particular group for any other reason? So perhaps just to clarify, at what point do we cut off in terms of the longer list, if you like, and what comes to this group? I think, Councillor Sims, that's sort of along the lines of what you were querying, and whether the full list should be coming to this group.
I'm afraid I'll have to get back to you on that one and make sure that this is either a full list or there's an explanation as to why it's not a full list. But without going and checking our internal documents, I don't know the answer to that question at this stage. So I'll get back to you.
Thank you very much. And I think I must admit, the point Councillor Sims has raised, there are probably others as well which now come to mind, which, you know, perhaps aren't on here. So if we can come back and clarify for the group, you know, what the position is, I think we can perhaps come back to that one, Councillor Sims. But
it's I would expect to see a lot more operational risks. I would expect to see specific risks for specific services where heads of service and directors of service have actually sat down and thought about the risks, not just put it down on a piece of paper as oh, we'll think of this one and do some blue sky gazing. Some actual risks that they face that really need to be dealt with, you know, that they're concerned about, rather than because the wording on a lot of these risks are quite not what I would expect to see on a risk register.
okay, thank you, Councillor Sims. So I think if we take that action away, Charlotte, to come back in terms of the whether there is a long list, what criteria is applied to select what comes to this particular scrutiny group, and then we can maybe make a call in terms of how we decide what actually comes to this group and what rationale is applied. But okay, and any other questions, Councillor Gray?
Right, just a question on, I suppose, the process of putting this list together. It states that the council's risk management group meets, and I just wondered how risks are fed into that group, and so how they're flagged day to day, and who can raise them.
Thank you for that. So all of our lead specialists and service managers have a responsibility for managing their own services, managing their risks, their performance, and so on. So there are officers, managers across the organisation flagging up risks that then feed into our performance management system, and that is what then gets fed up to our risk management group, which is formed of our executive management team. So discussion is held at that group, and they look at the information that is provided to them by the service managers and lead specialists. So the risks are reviewed at that group, they're reviewed by the service managers bi-monthly, and they're also reviewed by you on a 6-monthly basis.
Councillor Ray, does that answer your question?
Yes, very much. Thank you, Charlotte.
Thank you, Charlotte. So it's it appears there's quite a robust process and different levels of the process to go through before we get the final version here. If there are no other questions at the moment, if I may, Charlotte, raise a couple of points, 2-3 points. The first one is on CRR. Apologies, CRR FC-SO2, page 9. This is the new homes bonus. So clearly it is showing as a 9 and a red status. And there is mitigation referred to. The question I have is, in terms of the new homes bonus and it reducing over the next few years down to 0 in 23-24, the notes refer to the fact that currently primarily this is used for to fund the minimum reserve provision, and with that going down to 0, just a little bit more clarification in terms of the impact of that with the new homes bonus disappearing.
Thank you, Councillor Bailey. I can see that Marie and Sarah are both poised to jump in, so I'm just going to stay quiet.
Okay, in that case, Sarah, do you want to pick up on that one?
Okay, so as you quite rightly said, the new homes bonus does disappear down to 0 in 23-24. There is an ongoing consultation into new homes bonus as to what might replace it. So there is the chance that this funding stream may not disappear completely, but obviously at the moment we are prudently budgeting on the basis that it will be down to 0 in 23-24. And on that basis, our budgeting process assumes the repayment of the MRP continues throughout the MTFS period, and that is included in the forecast that we take to council in March.
Thank you, Sarah. So it's already taken account of, which I assumed was the case, but it was just clarifying for the group here. The second question I have relates to the Ratcliffe on Soar Power Station. Now, we've discussed this one, I think, a number of times. Clearly, as a business rates payer, the decommissioning of the power station will have a pretty significant impact. So, again, the mitigation is referring to the Freeport and the development company providing an opportunity. The question I have really is to understand, have we any assessment of the gap between when the power station rate income loss will be mitigated by potential growth in that area, and also how that is accounted for in our forward view.
Okay, so the Freeport negotiations are ongoing at the moment, and as part of that, they're looking at a no detriment situation to the local authority. So that basically means that what we currently get from our business rates, we will be no worse off from the Freeport situation. So that's ongoing at the moment, but it is expected that we will be in the same position, no worse off as we currently are.
Thank you, Sarah. And in terms of the gap between the loss of the income or when the Freeport income may come in, is there going to be a gap? Is there going to be an overlap, or what's the sort of assessment on that?
The time frame across the Freeport area would be that because of this no detriment situation, that there wouldn't be a gap.
Okay, that's no gap. And finally, from me, before I hand back to the floor for any final questions, the failure to deliver transformation has reduced from 12 to 6 in terms of the risk status. Charlotte, perhaps this one is for you. Again, I mean, the commentary, the narrative is actually referring to the fact that there is no impact due to the fact that the timelines have changed. But I'd like to understand, just in terms of the delays, whether how that is being taken into account, and whether there is actually a negative impact on not delivering the efficiencies of the transformation in the current year. Perhaps it might be you, Sarah.
Sorry, which one you were...
This is the failure to deliver transformation, which is FCS 13. Trying to see which page it's on. Yes, it's ORFC S13, failure to deliver transformation, has gone down from 12 to 6 in terms of the RAG status. So I'm just, I'd like to understand some reassurance as to why that is reduced so much. And in terms of the timelines, whether that's going to have a material impact on the current financial year. I'm trying to find the pages now. Yeah, page 11, I think. I think it was in the main list, actually above, in the narrative. It was. Yes, if you just bear with me, Sarah, I'm trying to go back to the report. So this is. My apologies, I haven't noted the page number. Perhaps we'll come back to that one, but it's the one referring to the transformation program within the council. The risk status has reduced from 12 to 6, and it is in the report. I apologise, I cannot find the page number. Yeah, I'm trying to locate where it was, but.
Last one, CRRS. There's a small paragraph there which comes from the data text report, which timeline change use.
That's right.
Even those projects are saving us. Our finance is doing better because the projects are being a little bit slower. But there's a lot slower delivery of projects.
That's right, yes, and it's really understanding the impact of the delay of the delivery of those efficiencies was the question.
The transformation programme does include those items, like you quite rightly say, and what we do annually is review the points at which we expect those to deliver those efficiencies, and we programme in, say, the proportion of the year that we think that the project is going to go live, and that will be updated again at the next budget cycle. And so any delays in the project and delays in delivery of those efficiencies will be refactored into the budget setting process.
Thank you, Sarah, for that clarification. I have one final one, actually, and that relates to our leisure services provider, Lex. So CRRNS17 on page 11, the impact of COVID-19 on the borough's leisure facilities and their ability to cover. So we've been supporting Lex over this particular period. I'm just seeking reassurance in terms of the long view of this support, Sarah, in terms of our leisure provider, and whether there is any assessment of the impact post the COVID period and actually moving back into normality, if I can call it that, in terms of how long it might take them to get back to their normal financial sustainability.
I don't have the numbers to hand in terms of footfall and return of customers as a percentage of their pre-COVID status, but we do have regular dialogue with the providers, and the trajectory and the pattern is that things are going back to a pre-COVID position. We don't anticipate at this point needing to continue to support Lex in the way that we did last year.
Thank you, Sarah. I mean, I think I'm aware that we are keeping a close eye on it, but in terms of the RAG status, I mean, clearly that still is in the red category. So I think we'll keep a watchful eye on that one and come back to that. Okay. Any further questions from our members? Councillor Bidsall.
Yeah, I have a number of questions. First one is, I'd just like to examine a little bit further the opportunities element of the risk register. So my question is, there's only one opportunity, which are we in the same position that there may be other opportunities, we just only have the one listed today, but you think there might be others? And how do you define opportunities? And because it's new, have you got a process and procedure to define what they are?
That's quite a simple one to answer. It is work in progress. So this new field of opportunity risk is something that we're developing. We're working with Zurich to do that. This is where we've started. We anticipate there being other opportunity risks in the future. We have not done that work yet, but we're still progressing it. There isn't a protocol or a process for identifying them other than the fact, as with the other risks, it's down to our managers and their understanding of what's happening on the ground to bring those forward.
Okay, yeah, clearly an opportunity is a risk that hasn't actually happened yet, isn't it? So there'll be many, many of them once you start looking at it. I know this has been mentioned already, but the list, I concur with Councillor Sims. I mean, I look at risk registers on a regular basis for various organisations, as you might know. This list does seem minimalistic and seems to miss out quite a few obvious things that have been mentioned. I mean, I could add to that list, but I won't. Is there a process of audit internally or externally on your risk process?
So our internal auditors, who are actually external to us as an organisation, but they use our risk register. They look at it every single year to come up with a programme of what audits they're going to be doing. All of those audits are based on the risk register. I have a feeling that if they felt it was inadequate in any way, then they would be auditing both the risk register and telling us. So we're confident that we're happy with what we've got in here at the moment.
So, sorry, I'll ask the question slightly differently. Do they audit the risk process, not the register, the risk process?
Every 3 years.
When was it last audited?
I think it's June next year.
Yeah, I mean, I would suggest that because you've changed the risk process quite significantly, it would appear that that priority for that audit should be brought forward as soon as possible on the audit plan. I'll just make another observation. It's not a question, it's an observation really. I feel that, as we've been told, this risk register is incomplete, and we could sit here and list lots of risks. I don't feel comfortable at this stage to accept this report because it's too incomplete. There are too many significant risks, and I can't sit here and say that it's okay to accept. So that's just an observation at this stage.
Councillor Beardsall, I don't believe I've said that it's incomplete. I've said that I will check to see if there are any other risks that we look at internally that aren't on the risk register, or whether it is complete as it stands now.
Whether or not it's incomplete from your point of view, I can tell you if it is just that we have in front of us, it is incomplete because, as Councillor Sims mentioned, some very obvious risks. I could go on and on and on and add ones to them, but I won't.
Thank you, Councillor Beardsall, for raising those points. So I think we touched on this actually earlier on, Charlotte, in terms of, I think there's two things here. One is the current list of risks which we have in terms of what the report is presenting to us and our observations, comments or suggestions in terms of those. But the more strategic question which Councillor Sims and Councillor Beardsall has raised is an understanding of whether there is a fuller risk register, and if so, how that can be scrutinised by this particular group. So I think what what I suggest, Councillor Beardsley, thank you for, and Councillor Sim for raising this particular point. I think if we wait for clarification from our officers, and then we can make a determination in terms of how that comes back to this group, so that we are able to have that assurance that we have had visibility and oversight of the full risk register. So I'm quite happy to take that away as an action to come back to this group in future, Charlotte. In terms of what has been presented with the current risk register, we are asked by our officers in the report to note the, if I can find the full recommendations, to note the context of this report in relation to the existing risks which have been presented to us, the progress on the risks identified in response to the pandemic, and considerations around recommendations that we have for the information that's provided in these. I believe we've had a reasonably robust discussion, a comprehensive assessment of what is contained within the report. Can I ask members to confirm that we are happy to note the contents of this particular report, subject to, I think Councillor Beardsley has, with Councillor Sims, raised this issue of the full register, which we can come back to perhaps at the next meeting. But can I just have a confirmation or a show of hands from members if we're happy to note, as presented to us, the current report?
On the proviso, next.
Okay. Thank you, Councillor Beardsley. So we have, I think that was a unanimous agreement and approval that we note this particular report, and that is from Councillor Beardsley, subject to the issue that I've just raised. So thank you very much, and thank you, Charlotte, for presenting the report to us, and thank you for our members for the insightful questions. Can we move on, in that case, to agenda item number 5, which is the going concern assessment linked to COVID-19, which is on pages 37 to 42 of our pack. And it's the report from the Director for Finance and Corporate Services. So I'm not sure, Sarah, is that going to be yourself? Okay, over to you.
Thank you, Chair. So this report, it reports on the Council's position in terms of going concern, which the purpose of which is to review the Council's ability to continue in operational existence for the foreseeable future and realise its assets and settle its obligations in the normal course of business. So this generally comes, the focus of this is done under 4 headings. So you've got financial position, projected financial position, governance arrangements, and the control environment that we operate in. So these are considered from paragraphs 4.3 in each of those sections. So 4.3 looks at the Council's current financial position, and this is basically the outturn position for the Council. Reporting at the moment, the reporting for the year, a saving of 0.93 million and earmarked reserves of 22.4 million, 6 million of which is specifically related in relation to the collection fund, and a reserve has been created for the purposes of releasing this in 21-22 and 22-23. Paragraph 4.4 points to the Council's general reserve. It sits at 2.6 million, which is in line with the Section 151's assessment of the minimum level that needs to be held at. Paragraph 4.5 shows that the Council held £34 million in the form of short-term investments, and 4.6 showed that the capital programme provision was 16.13 million, with a 6.7 million underspend and carry forward into 21-22. The balance sheet at the 31st of March 21 at paragraph 4.7 shows 29.9 million, which is significantly reduced for the pension liability of 63.2. Other factors that are taken into account are the provision for doubtful debts, the range of reserves that the Council holds, and the working balance that we can utilise to meet unforeseen expenditure. Moving on to the second point, which is the projected financial position. Paragraph 4.8 currently notes that we have a 13.3 million net spending budget. And of that, we have 253,000 for the transformation programme and 1.1 million from the new homes bonus, as previously mentioned, to offset the impact of MRP, or minimum revenue provision, and 4 million to be released from the collection fund reserve to offset the estimated collection fund deficit in 21-22. This is also referred to at paragraph 4.3. Paragraph 4.10, just in bullet point form, just gives the key points of the report, the Q1 report. So at the moment, we're projecting a net efficiency saving of £880,000. There's an estimated 2.8 million variance on the capital programme. And our multi-asset investment values, which took a significant hit at the end of the last financial year, has recovered by 1.143 million against what was originally 1.238 loss. We have currently projecting a 2.338 million on business rates. However, 1.8 million almost of that will be required to be put in reserves to be released in later years, similarly to the position that we're in at the moment with the 6 million that's going to be released. Paragraph 4.11 moves on to governance arrangements, and this shows that we do have a robust corporate governance framework. And 4.12 refers to the annual governance statement, which is included within the statement of accounts. 4.13 moves on to the external regulatory and control environment and talks about the requirement for a balanced budget, and that the section 151 must comment upon the robustness of the budget estimates and the adequacy of reserves. External audit also play a key part in this control environment. Conclusions is that the council does remain a going concern, and it would be unlikely that a council would be allowed to fail with interventions by government and other measures that we can bring into play. If anyone's got any questions.
Thank you very much, Sarah, for that overview. Councillor Beatle.
Normally, when I look at financial reports, it's very helpful and normally to see comparisons to the previous year and performance, etc. We've got none of that here. They're just suggestions. So we've got no idea whether, or no substance to understand what the performance actually is. Can you comment on that?
The financial figures that are contained in this report will be reported to other meetings, at which point there will be comparative figures.
So what we are being asked to do here then? What are we being asked to agree?
To agree the section 151 officer's assessment of our going concern based on the information from the previous reports and previous meetings that we've had.
Councillor Beatle, do you have any specific areas of concern or that you would like clarification on?
Well, yeah, I can't really make any recommendation or agreement on any of this because I haven't got the previous trends or information that would support this information. So it would have been helpful to see that. Otherwise, we're just given, you know, anecdotal evidence without any previous information or trends.
Perhaps Sarah might want to come in here, but in terms of the recommendation in terms of noting the going concern assessment, yes, I acknowledge that having comparatives for previous years is useful, but in terms of the current financial position of the council and what is being presented, I mean, Sarah, perhaps you can confirm this, but you've not highlighted any significantly adverse indicators which appear in the report. Now, the reason I raise that is we can look at those in absolute terms in the current year and the current context to make a judgment on whether we are satisfied in terms of the going concern status, or we can compare them to a previous year. But I must admit, in this particular instance, I'm not quite sure the references to previous years, how that would necessarily help make a judgment in terms of the current financial year. Sarah, do you want to come in on that?
Yeah, that's exactly right. It's an assessment at a point in time as to looking at the next 12 months, whether we are a going concern. And at this point in time, the Section 151 officer's assessment is that the reserves are at the established level, and also that our position in terms of the current financial year and our governance arrangements are all sufficient.
Councillor Beardsall, does that help clarify, or would you still like to see the equivalent figures for previous years? I mean, I would acknowledge, though, I think in the report there are references at various paragraphs and points of previous years. There aren't tables as such, but I suppose the question is, does that cover the point, or would you still like to see that? I'm sure, Sarah, if that's the case, perhaps we can give the comparative figures for previous years.
Yep, I can certainly do that.
Sorry, I think that'd be helpful moving forward. You know, just looking at it like this is, I've never looked at a financial report before, which is just paragraphs and without figures, giving comparisons or trends, or, you know, we talk about certain reasons and potential projections, but they're just not substantiated for me. So yeah, please.
Okay, all right, well, thank you for raising that, and I think, you know, perhaps, Sarah, if we can come back with that for the group. Are there any other questions from members or points of clarification? If I may ask one, Sarah, in terms of the Section 151 reference, the optimum general reserve, there's reference on paragraph 4.4 to 1.5 million or 5% of OPEX, or operating expenditure. 1.5 million, is that a self-determined number, or is that some sort of statutory number which has been suggested?
There is guidance within the codes that we follow. I'd have to double check whether that 1.5 is actually specified as a minimum level. Come back to you on that one.
Yes, thank you. Although fully noting that we actually have 2.6 million in terms of that number in the current account, so that's reassuring. The second point I had was the paragraph 4.7. The balance sheet is showing a net worth of 29.9 million, and that's after the pension liability of 63.2 million. The question really is around assurance around. I mean, there's references to potential increases in pension contributions, but I'd like to think that that isn't necessarily the default mechanism for addressing any future deficit. So, what other mitigation is there potentially for that?
The actuaries undertake a triennial review every 3 years, and at this point they make an assessment in their capacity as experts in the field, and make an assessment of the ongoing liability that will be accrued by the authority in terms of pensions for current pensionable age people. But there's also an element to the movement in the balance sheet of the assets that we've got invested and the value of the liabilities, which moves with inflation and all of the financial elements. So what they do on this 3-year basis is deliver us a new percentage rate of recovery for those pension schemes, and also a lump sum that's due to be paid over that 3-year period to effectively catch up on that element that's under recovered.
Okay, thank you. And actually, in this case, going back to Councillor Beardsall's point about comparators, I probably would have found it useful to just see previous year's balance sheet net worth values to see what the trend is. So I think there's certainly some validity in being able to do that in certain cases. Okay, any other points from members? Councillor Stotwood. My apologies, sorry, it was Councillor Sims.
I was just going to say that my understanding is that the statement of going concern status is all about, is one part of the supporting text for the statement of accounts, which is due to come. And that we are looking at an assessment that's been done, and that is why it's text. I'm sure that the statement of accounts will have the year-on-year figures, as they always do. With regards to the four aspects of the going concern assessment, I would summarise it that the council was a healthy position before the pandemic. There were some negative impacts of the pandemic, but that we're still in a healthy position coming out of the pandemic, and with a positive future in the years ahead. So I think, although I'm sure all the details will come forward through the statement of accounts, which are due at the next meeting, I think the recommendation in the report is something I can support. Thank you.
Thank you, Councillor Stockwood, and we'll come back to the recommendation in a moment. Councillor Sims.
Yeah, I just want to sort of make a point. My understanding of these groups and this group is we are here to scrutinise the workings of the council and officers to see if we're getting it right and where we could do it better. If you could clarify for that for me, because I'm really confused. Are we here to rubber stamp everything, or are we actually here to scrutinise? Because if we're not here to scrutinise, I've got better things to do with my time. If we are here to scrutinise, we should have documentation comparable with benchmarking and things like this. Is an important document, and we are non-professionals in this room, so we need to understand things better. And I just wanted to make that point that if we are here to scrutinise, let's scrutinise and let's ask the awkward questions. So I just wanted to make that point. Thank you.
Thank you, Councillor Sims. So I think on the point of we are here to scrutinise, absolutely. I think we would all agree on that. That is the whole purpose of having the scrutiny groups, and that is indeed, in my view, what we are doing in this meeting. The officers have presented to us the reports which provide summaries and recommendations in terms of the current financial status, in this particular case, of the council, and it is our role to look at that information, to seek clarification, to scrutinise during this meeting. If we are not happy with the clarifications or the responses, then as a group, of course, we can go back and seek further clarification and actually bring it back to the group. So I would robustly suggest that, you know, we are here to do precisely what you've suggested. Obviously, if we do feel that perhaps the information is not as full as we would like, then that is for the officers to take away. And we've already noted in some instances where possibly comparators from previous years may help. And as Councillor Stockwood has said, I think in this particular case, the statement of account with some of these figures, when we have that presented at the next meeting, will provide that further clarification. And as you're aware, we do also have in these groups our external auditors, our internal auditors, to further clarify and provide responses and answers. So I think the mechanism is there, the scrutiny group is here, and it is, in my view, it is in a position to do precisely what you have highlighted. And as I said, we have the right to request the necessary information to make those judgments. So I don't think that's in question, is what I'm saying, Councillor Sims. So Councillor Beardsley.
Yeah, the message that's coming across here is that this report, we'll know whether it's any good or not in terms of being able to scrutinise it when we get the next report to do with the accounts. So by default, we're being told that we don't know if this report is whether we can scrutinise it or make an opinion on it until we've got the next accounts. That's what the message we're now being given. So therefore, this report should really either be supported by those accounts, or we've got, as I said earlier on, I don't want to feed a dead horse here, but we've got no method of knowing the performance or accuracy of what we're being told at this stage in time. Okay. So what happened last year? How how good was the report last year against when the accounts came out? Was that an accurate report, which would give us confidence then in this report? And as Councillor Sims has said, we're here to scrutinise and ask awkward questions, and we're being asked to scrutinise this report. And again, you know, we haven't got all the information.
Sarah, did you want to come in this one?
Yeah, I just wanted to point out that the draft statements are actually available on the website, currently being audited, so they're not signed off, but they are available to review.
Thank you, Sarah. And just picking up again on the point of this particular, and Sarah, perhaps you can clarify, this particular agenda item and what we have been asked to do is a snapshot in time. The statement of accounts are the end of year position also, and that does certainly, they do have those comparators from previous years. In terms of this particular report, and I'm quite happy for if members feel that there isn't sufficient information here in this report, we can seek further information. Councillor Stockwood has already proposed that we look at the recommendation, and Councillor Stockwood is satisfied that it is providing a picture of a healthy position in terms of going concern status. So perhaps I can ask other members to either, Councillor Adair.
I think I concur with what Councillor Stockwood has actually said, because what we're actually looking at is a position as of now, is where the status of the accounts and the financial situation of the council is currently, or when this report was stated. It's not about a balance sheet, it's about just the status of where we are with expenditure, with the balances we've got, with everything we've got in the bank or wherever at the moment, and it's just a current status. And that in 3 months' time will have changed.
Thank you, Councillor Adair. Any other comments? Yes. Councillor Sims.
Yeah, I just want to say that this is a useful conversation in a scrutiny group. We really need to get it right going forward. I mean, the words you used on the last agenda item, after I'd spoken and clearly identified that there were inadequacies in the documentation that I was seeing. You used things like robust and comprehensive as through the chair. I never said it was robust and comprehensive. I was saying completely the opposite. So I think the language that we use in this group should be more appropriate. We were asking the officers to go away and bring back more information, just like we are doing now.
Thank you, Councillor Sims. Any further comments from members? The recommendation in the report is to note the positive outcome of the assessment made by Rushcliffe Borough Council's status as a going concern for the purposes of the statement of the accounts, which are due to be presented at the next meeting. So I'd ask members to confirm whether we are happy to note the current status and report as it has been presented to us. We have Councillor Sims and Councillor Beardsall who have not approved that particular one. Sarah, I'm not quite sure in terms of taking that forward, where that goes. Well, I'm assuming that was an abstention, Councillor Sims, so perhaps you can confirm. Can I ask for your sort of confirmation of where you are then stand?
Okay. You could vote for or against. So, yeah. So if they're against, it was a 4.
So we have two against, and the remainder of members in favour. Tracy, if we can please minute that.
Yeah, I'm making it.
Thank you very much. Okay, thank you all for your contributions on item number 5. If we can move on to item number 6, asset and investment management outturn, the report from our Director of Finance and Corporate Services again, which I think, Sarah, you're going to present to us.
Thank you, Chairman. Part of the report is going to be presented by Marie, and then she's going to hand it to me for the second part, so I'll just hand it to you, Marie. Thank you.
This report summarises the outcome position on the capital and investment strategy and accords with professional practice. The report also provides information on the impact of COVID-19 during the year. Section 4, page 40, details the Treasury management indicators. Actual expenditure against the revised programme was 9.3 million, giving rise to a variance of 6.8 million. This has been reported throughout the year to both Cabinet and Corporate Overview Group. Most of this underspend was carried forward into 21-22, the two largest schemes being Bingham Hub and Gresham Sports Park redevelopment. Paragraph 4.4 shows that due to reprofiling of capital spend, the Council's overall need for borrowing did not increase. The table in paragraph 410 shows that no additional borrowing was needed in the year, giving rise to a reduction in CFR of £1 million after deducting the MRP repayment for the year. Paragraph 4.15 shows the ratio of financing costs to net revenue streams. This is lower than estimated due to higher interest earned and additional COVID grants. Paragraph 4.18 details the Council's investments as at 31st of March 21. These totaled 47 million compared with 35 million for the previous year. Paragraph 4.19 explains that whilst interest rates have fallen, the Council has still received more interest than budgeted for, primarily due to larger investment balances and investing in higher interest accounts. Investing in diversified funds and property funds comes with higher risks, and in 1920, the fair value of these investments had fallen by 1.238 million, but as at 31st March this year, had recovered by 1.143 million. Just checking values today, we're actually back to pre-COVID values. That's very, very promising. The need for liquidity arising out of COVID-19 means that investments are largely being held in money market funds. Paragraph 4.21 shows balance sheet resources. The increase between years primarily relates to government grants in relation to reimbursement of additional business rate reliefs. Overall, the Council has successfully achieved its objectives. COVID-19 presented risks and will continue to do so. These will be closely monitored as the economy enters its recovery phase. I'm now going to hand back to Sarah, who will run through the performance of the asset investment strategy. Thank you.
Thank you, Mary. So to continue on into the asset investment strategy section, paragraph 4.18, this details the Council's investments as a, oh sorry, I've gone back too far up. Paragraph 4.24, the Prudential Code details about the Prudential Code that is currently being consulted upon. It's in its second round of consultations, which is intending to strengthen the restrictions, the governance around whether local authorities can borrow and for what purposes they can borrow for, with its intention to prevent them from being able to borrow to purely make a profit for commercial gain. The table at paragraph 4.27 shows the current position on our allocation from the asset investment strategy and shows a good spread of risks that are depicted on the charts on paragraph 4.28. The table at 4.30 shows that as a council, we are not over-reliant upon income from commercial assets as a proportion of our total council income, and we're well below our target of 30%. Paragraph 4.31 explains why we have restricted or reduced our investments, commercial investments. And this again is in reaction to the PWLB consultation to restrict council's borrowing activity. And as a result of that, we removed the remaining asset investment strategy balance from the capital programme. The position overall remains fluid and there are still risks associated with Treasury and commercial investments. And failure to deliver additional income streams will increase the requirement to identify further efficiencies or utilise reserves in the short to medium term. And we'll take any questions.
Thank you very much, Sarah, for that overview. Can I open the floor to our members for any questions for Sarah? Councillor Adair.
I think when you look at it through from where we were to where we are and the recoveries that we have made from post-COVID or pre-COVID to post-COVID and the variances that happened, I think here a good job has been done actually to get there. And I know that's monitoring the markets, monitoring also the investments and the different portfolios of investments. And it's actually looking at it, I think a lot of investment companies would be quite happy with their properties and their analysis to be getting this sort of return and result over the period of time of which we're looking at. So that's, to me, it's a very positive result.
Thank you, Councillor Adair. Any other comments from members? Sorry, Councillor Grangley. No, sorry. Sarah, a couple of clarifications from myself. The increase in the investment balance has been explained by a slippage in the capital programme and also additional Section 106 monies. Can we just clarify how much these Section 106 monies were? Is that a small nominal amount, or is it actually a significant amount of that increase in the investment balance?
It is a significant amount. I believe it's about 20 million. 27.
27 million. That is quite significant. So in terms of those returns, although they are positive, we've had the extra 106s, but that's not necessarily always guaranteed. So I'm sure you're factoring that into the overall portfolio decisions, but that is a significant amount. The second question I had was in terms of page 44, the table of where our deposits are. There are three specific numbers which stick out for me, and that was the Aviva Investors, £89,210, Goldman Sachs Asset Management, 53,756, and also Handelsbank, which is 412,000. Now there's a total of 554,000 or thereabouts, which is showing currently in terms of the interest or the returns at 0%. So the question I have is, with over £500,000 on deposit with those particular institutions, number one, how long has that been there, and could we make better use of that money elsewhere if we were to make an alternative decision?
That's a very good question. When we make deposits in these organisations, we are restricted to maximum limits within certain bodies. So it's not always as simple as being able to call back our funds and put them into other higher earning accounts, because we may already be at those maximum limits. So we have to bear that into mind when making these decisions. But as you quite rightly say, some of them are sitting at 0%, and a review is undertaken. We are undertaking a review at the moment of those lower earning accounts to see if there is a better way to invest them and increase our returns.
Sorry, Sarah, could you just add on to that? A bit like the balance sheet, the investments are done daily. Do you know, I'm sort of saying this was a snapshot in time, and depending on sort of when payments are due, we have to keep money quite liquid. Some of these accounts are like better interest on 35-day accounts, call accounts. If we know we've got something pending that week, we have to make sure that we have the money to pay for those items.
Thank you, Marie. Thank you for that clarification. Do we have any further questions for our officers on the outturn position? Councillor Adair.
I mean, it's got a good performance here currently coming out. But do you see any real risk to anything that you're doing here now? Is there any I mean, could you wake up tomorrow morning and be surprised with something that's gone wrong?
As it's been linked, and they compare Rushcliffe with other authorities that they vote for. Those extremely impressed with, you know, how we handled the TM, our results. It's like we are an extremely good authority. And yeah, and I'm very proud, and I think we do a very good job. And I think you picked up on that when you first sort of said, you know, the returns that we've received and have earned during such an extremely difficult year is just very, very good, really very good, something to be proud of.
Sarah, sorry, were you going to come in?
No,
No.
sorry.
Okay. Another quick one from me. On 4.28 and 4.29, the spread across sector in terms of income and asset values. This relates to partly the discussion we had earlier in terms of comparators. 4.29 does refer to the fact that there is more investment in the industrial sector. So I'd like to understand really what sort of criteria we're applying in terms of when we make these decisions, and actually how have those investments, the income on 4.28 and the asset value split actually changed?
In terms of the decisions, do you mean the decision making in terms of where we make those investments?
Yes, I mean, it's quite clear in terms of our recent investments in commercial property and so on. We have made further acquisitions, and that's increased that sort of split. But just an understanding really, Sarah, in terms of the process behind the decision making in terms of the application of those funds.
Yeah, you are right. We did. And the last two assets we acquired were 2 units at Edwalton Business Park, and before we returned the funds back into the scheme. So this position now is not with ongoing decision making within it. But those we do take professional advice from our Treasury advisors, and we also have a group, or had a group rather, that would make decisions on where these investments go. Obviously not needed at the moment with us not making any more of those investments, but those decisions were scrutinised, so there would be a financial assessment, not only a financial assessment, but there's also an assessment as to its energy rating, the location of the business, whether it would give us a diversified split in terms of where our investments sit.
Thank you. And one final one from me. You referred to the 30% cap in terms of the ratio of income versus investments and so on. I can see on page 48 the percentages are rapidly increasing to 24.6% in 25-26. Do we, as a council, and the investment sort of strategy that you referred to, do we have 30% is the upper limit, but is that where we are heading in your view, or will we be stopping short of that? Because I mean, clearly, the higher the dependency on that sort of income increases our risk, going back to our risk discussions earlier on. So I'd just like to understand what the strategy is behind that.
So you are right, the 30% is a limit we've set ourselves to, as a degree of proportionality against our risk of the commercial income market. We're at a full year effect in 22-23, might be 23-24, in terms of our maximum return from our commercial investments. So that number isn't expected to increase significantly from where it is now.
Thank you. Any final questions from members? Councillor Beartle.
Yeah, question. Various funds you've got here. First question is, what process do you have in the council for monitoring the spread of the type of funds within the portfolio within the investment funds?
Do you mean the asset investment portfolio? The Treasury portfolio. That's determined by the capital strategy that goes to council in March, which is also governed by the assessment of our Treasury advisors, who advise us on which our spread, let's say, of over the different markets that we can put our money in. So we've got money market funds, and then different banks that are rated, and they advise us on which ones we can invest with, and that goes into our strategy, and that's we operate within those boundaries.
Okay, let me put the question slightly differently. So a fund itself could be invested in diamond mines in South Africa. It could be invested partly in a company in China. It could be invested heavily in energy supply for gas, which is the point I'm coming to. But as an example, with that, now there's a real risk. So if any of your funds are invested in risk areas, A, financial risk areas, and B, ethical areas that really we shouldn't be in, environmental, for example, impacts is a good example, and many others. So where's the scrutiny taking place to look at that? Or the way you answered it, the way I understand your answer is that you've got an agent, an investment advisor, which is saying, yeah, go there, and there, but there's no further scrutiny into the makeup of those funds and the portfolio of those funds, which could include a portfolio that could put you at risk, or maybe ethically not compatible with this council.
Okay, so our Treasury Strategy, as I mentioned, that goes to council in March, includes our plan or our boundaries of where we can invest our money. And on a regular basis, on at least a monthly basis, the Treasury team get together and look at where we're going to invest our money. If there's a decision to be made in terms of a fund, a particular fund, so we've got some in a diversified fund, we would do our due diligence on those accounts, again with our Treasury advisors, but do our own research before we make those investments. But there is also a section in the strategy itself that does refer to we will not intentionally invest in any areas that are of concern, so like sort of like the green agenda. It is taking more prominence at the moment, the environmental, social and governance agenda in terms of investment opportunities, but because these are quite new to the market and it's difficult to measure them, it's not something that at the moment is in our strategy, as in we can't be specific about where we're going to invest those, but we do have a section that says we won't invest knowingly invest in those that are risk areas.
So just to sort of close the loop then, so I can't see from this report, I haven't, if a resident, a citizen said to me, oh, Rushcliffe, you've got a massive investment portfolio, and I hope you don't invest in an ethical area. I wouldn't be able to answer that, and it sounds like the council wouldn't be able to either. You don't know right now, you only review it at the point of investing, perhaps it sounds like. You don't actually know the makeup of the portfolio investment.
Well, the makeup is the table on page 44, 47 million balances invested with, you can see the list of investments there. The difficulty you've got with some of them, not necessarily that we've invested with, but some organisations, is that they will invest in, again, a diversified fund, so they can have a number of areas that they will invest their money in. You put your money into their fund. We, at the point we invest in anybody that does that sort of thing, we would make a review as to whether they contravened our strategy in any of the items we say we will not knowingly invest in.
So what are you telling me, that all of the investment funds, you know where all the money is being invested in the different investment funds that you're using?
I don't think you can ever know every single item of every investment that you're investing into, whether it somewhere along the chain has an impact on those items that you refer to. But we do our scrutiny and do our best with what we have and the information that we have at the moment.
Councillor Vittle, can I just ask whether is there a proposal here or a suggestion for our officers to improve the process can we help them in terms of scrutinising the current strategy? You clearly are highlighting perhaps an alternative approach. If so, perhaps we can share that with our officers.
I'm not highlighting an alternative approach. I'm just going to consider the answer for some time and maybe bring it back into the future. But I do believe as a council, we need a greater level of transparency about where the money is invested. I have investments. I invest in various portfolios, but I select the ethical ones, so I know where my money is going. I won't, if I've got some investment that was attached to energy companies, I'd be moving it pretty quick. But I know about that, and you can know about that. That's for definite. You know that you do know where your money is invested. If you invest in a investment group, you can quite often select the type of fund that you're going to use and invest in. So I just think that's something the council needs to be able to tell the citizens, and it's maybe something that will come up in the future. I don't know. Personally, I think that we've got a list of investment in the table institutions, but we don't know what's behind them from the report. I'm not suggesting that you should have brought that information on this occasion. Okay, don't misunderstand me. But for me, I think we should all consider this from an ethical point of view. We should know where our money is being invested, and from a risk point of view, we've been talking about risks all evening. From a risk point of view, then we would expect the council are reactive to any perceived risks, and the only way you can be reactive to a financial risk of a particular sector is to know where your money is invested. So I'll leave it there. Thanks.
Sarah, do you want to respond? And I think Councillor Stockwood wants to come in as well.
I was just going to make a point that there is an opportunity, or you can, as a council, make a strategy that focuses on an impact investment. So rather than saying that you won't invest in certain things, you can say we will only invest in, like you say, those green investments. That would be the only way you would wholly know for sure that your investment isn't remotely connected to any of those, fuel, energy, whatever. But what you have to bear in mind is our primary objective with our investments is its security, and liquidity and yield comes after that. Obviously, this is a focus for us, is the environmental side, but we do have to focus on security. And at the moment, with, like I say, the green market being fairly in its infancy in Treasury terms, it's not providing at the moment the most secure environment for our cash and for the taxpayers' money.
Councillor Stockwood.
I haven't asked any questions on this point. I'd just like to briefly explain that. I do attend the training, which I believe is coming up again this November. And in that training, we are shown a chart of the performance of different councils that use the same independent advisor. And I do recognise that in terms of Treasury management, we have an excellent service. And I have to say, perhaps particularly in Bingham, when Bingham had a large sum of money held by the Rushcliffe, I think we had around, particularly some I'm thinking of is from a development called Mill Hill. We had around 1.3 million deposited, and as the years went over, we've been able to spend 1.7 million because of the excellent work of the Treasury management and the fact that the income generated adds on to the Section 106 money accumulation there. So we've done very well at the Treasury Management Service, and I do appreciate when ranked against other councils, it's very good. Over the years, I have commented upon the asset investment strategy, and I do support the steps that CIFA is taking to adjust the prudential code to be more stringent on how councils invest commercially for income. And I supported that direction, and I raised questions at the time when this council had a £20 million list of investment strategies. But I understand now that we're moving away from that, so I don't feel the need to talk about it anymore. We've made our decisions. It turns out they're actually very good decisions, so I was wrong on that point, but I was perhaps more risk averse than others. So in looking at it, taking on board the points that have been made, that in the training, I think they call it the slide factors. It's security always first, and we're always looking at our AAA and AAB perhaps secure funds to invest in, but then the liquidity and yield. When looking at all of this, I have to say that each year, as I've looked at these reports, and each year it's an annual cycle where we set out our Treasury management strategy, which is in the back pages, the statement of accounts, you'll see it, and it says we will invest in this year. And now at the end of the year, we're seeing this report which says we've had another good year. And so I have challenged questions in the past, but I do think we're doing very well with Treasury management and asset investment strategy, better than I anticipated or when I was concerned about things. And that's why I've got no questions on this item. I think it's a positive report. And I think there are other councils who are jealous of the successes of Rushcliffe. We should thank the officers for that. But that's all I've got to say. Thank you.
Thank you, Councillor Stoppelwood. I think, I mean, I would tend to agree in terms of overall performance. I think as a council, we have and are still doing very well in comparison to others, and particularly in the current market and the context of COVID and so on. So I think that there is something to celebrate there. However, I would acknowledge, Councillor, I think Beardsley's point in terms of perhaps, Sarah, if there is a way of coming back to this group in terms of more transparency in terms of the investment strategy, particularly with what levers or ability we have to influence. You know, it's not just the initial decision of some of these institutions where we're depositing the money, but their own strategies in terms of where they're placing those funds. How readily or easily is that information available? How useful we can make that in these sort of discussions, so that we can have a legitimate debate and make those sort of decisions, be it, you know, for environmental reasons. And I note what you said in terms of security as a primary criteria, liquidity, yield, obviously, but certainly environmental, green, or other factors which we may want to, as a group, look into and make a decision before we satisfy ourselves that we have the right strategy. And the results speak for themselves, clearly, but I think it is right to further question and be involved in the understanding of those decisions. So if we can come back perhaps to a future meeting with proposals how that that might be achieved. Okay, and Councillor Sims.
Yeah, I just want to say I receive a lot of emails about how local authority invests and how unethical local authority invests and support this cause and support that cause. So I just wanted to say that security, yeah, totally get that. We need to make the taxpayer of this borough secure, but not profit at any cost. I think it's really important. We are a leading borough council, we're a leading council, so we need to be transparent. So I would support what Councillor Beardsley has said, that we need to understand there are mechanisms in place. We have a lot of money that invested, which gives us a lot of influence to actually see where it's going. And when we're scrutinised, then we can actually say we went there. It just makes perfect sense to say, well, we give it to an investment company and they do really well for us. We really don't know what they're doing with that money, and we are accountable to the taxpayer. So we really need to be mindful of that. So I would support any greater information and greater control of where we invest as a council.
Thank you, Councillor Sims, and as already noted, I think that is the right way forward, and as a group, and that's what we're here to do. Going back to your earlier point, scrutinise what the council is doing, both on behalf of our taxpayers and ourselves as members of this group. So I think we've got that as a takeaway action, Sarah. Thank you very much. And going back to this particular item, the recommendation is for the group and members to agree the 2021 outcome. Can I have a confirmation or show of hands that we are happy to do so? I think, Tracy, that's all members in favour of that recommendation. Thank you very much. Which moves us on to our last agenda item, which is the work programme. Sarah, do you want to pick up on that in terms of forthcoming items? Because I know we've moved the statement of accounts and the internal audit report, which I think is coming to us in November.
Yeah, so November now currently has, it's quite a full agenda, which we've also got the 6-month update on Treasury investments this year, as well as the streetwise statement of accounts, as previously mentioned, and the 2 audit reports. When we discussed earlier, when we discussed earlier with Charlotte, I think there was a request for Charlotte to come back again with the risk information. Is that something you also want to put on November, with it being, would just be my point?
I think in view of the discussion we've had and some of the concerns around whether we do have a full understanding of that risk register, I would suggest we add that to that one. It is a full agenda, clearly. Are members happy with the proposed November meeting? I mean, there's quite a lot to get through there, but I think some of them we have no choice in terms of the statement of accounts and some of the audit reports and so on. Certainly the risk register one, I think there was a legitimate debate around understanding that further. So
the risk management is actually due back again on the 3rd of February, so it's
right.
If you want to.
Councillor Stockwood.
Mr. Chairman, sometimes scrutiny meetings, they identify some actions within the meeting, and they get to, rather than wait a quarter before responding, there could be an opportunity for a written response from officers just to clarify the details of the risk register, so that it would come back very quickly without us having a very long agenda on 25th of November. I'm not familiar with the streetwise annual report. I think that's something that's coming to committee as a new thing. So I don't know how much time that needs to be addressed, or how much has been looked at before. So, and of course, you've got the statement of accounts. We've had a lot of the issues described tonight will be actually appearing in the statement of accounts. So perhaps some of the we could leave it with officers to look at some of the points that have been raised in the body of the meeting, whether or not they could be just addressed as actions generated from the minutes, and that they could just be written statement to committee members, because that actually gives committee members responses much quicker than waiting for the quarterly meetings. While it also, I think you're going to have a very busy meeting on the November meeting, by looks things to me.
Indeed, thank you, Councillor Stockwood, and that's a very good suggestion. So I think when I was referring to takeaway actions, actually, I was going to pick up with the officers in terms of being able to come back, but particularly in terms of the risk one, because of the nature of the debate we had, are Councillors Beardsall and Councillor Sims content with a written response prior to the next meeting, or would you like to see that as a substantive item at the next meeting?
I would like to see it as an item at the next meeting. Personally, I don't know how Councillor Beardsall feel.
I'd like some information to be emailed, because that'd be good. But it might actually be a very short agenda item, because it might be that is no further on the risk register and no further risks, and so therefore the action is then going to be recommendation, no doubt, from, or certainly from myself, will be that you need to go back and create a bigger risk register if that's the case. So yeah, I think, you know, we're about scrutiny, as been said by Councillor Sims. We need to look at things properly. We shouldn't be bound by the fullness of an agenda. That's the whole idea, to review the work programme. So what I'm going to suggest is, if there is a bigger risk register for us to have a look at, I would be content to move that into February, so that we can look at it properly, as a number of things on the 25th of November are quite substantive elements to look at. A streetwise annual report, I've done that several times before. That can take 45 minutes to an hour or more sometimes. So let's have a review report back email wise, but then if there isn't anything on the risk register, we're going to review it in February anyway.
Sarah,
If there is, we'll review February.
thank you, Councillor Beardsall. Sorry, Sarah, did you want to?
Yeah, I was just going to suggest that exact point, if we maybe get a written response from Charlotte on the points, and then if we need to expand the discussion at the next, at the February meeting, or raise anything a bit sooner, we can do that after that response.
Okay, we have a proposal there, and I think broad agreement in terms of the substantive items for our next meeting. We will come back with written statements. I think there was a risk register and also the investment strategy, Sarah, around more transparency in terms of the investment process with the institutions we're investing with, and we'll have those before the meeting, and subject to what that reveals, we can, as Councillor Beardsall has suggested, move the risk item to, I think, February. Okay, in which case, if there are no other, Councillor Day.
Just a little bit taken back by some of my colleagues there. Sort of, it was as though the rest of us at this committee are not scrutinising enough. There's only some members of the committee scrutinising, and I don't accept that. I scrutinise well, and I know how to read balance sheets. I know how to read reports. I've been doing it for 50 years.
Thank you, Councillor Adair, and that's reassuring. I also have a similar financial background, and I think the point is, I suppose, as a group, we have a mix of skills, a mix of backgrounds, and ability to scrutinise in different ways. However, I'm trying to acknowledge, I think, members of the group, obviously, clearly, who feel there should be either a different process or additional information. But I do accept what you said, that I think it goes without saying that there is a full group here, and I think, you know, from some of the comments I've heard, there has been general consensus in terms of the process that we've applied and some of the questions we've been asking, and the pressures we've been applying to our officers in terms of responses. So I accept that. I'm trying to, at the same time, just balance in terms of making sure that all of our members of this particular group do have an opportunity to raise their concerns. But thank you for that reassurance. That's good to hear. Okay, so I think that takes us to the end of our formal agenda, in which case, if there are no further points, thank you all for attending this evening and your contributions, and I look forward to our next meeting. Thank you very much.